Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. We're dropping this video a little bit earlier than normal. We're usually here at 10 p.m., but I had to come on a little earlier. GameStop, the stock market, all of this has been a wild day. I mean, it's made for a very entertaining day, depending on what side of this you're on. So I want to explain, what did GameStop do? How did it break the investing world? What happened after that? And what do we as investors do next? And what are we supposed to make out of this? So I got a list of things that I need to go over. So I'll be kind of going back and forth because a lot did happen. I will first start off by telling you I told you so. I've been saying this for a while, right? You can go back to the Flavor podcast. It's me and the millennials next door. We do this a weekly podcast and we recap the biggest stories. We said, actually, the last 2 episodes, I think we brought up GameStop. I'm like, man, this is crazy. Not something I would do. It's very dangerous. Been saying that. Yesterday's video, I said that. Monday's video, I said it could be dangerous. I even said it's not something I would do if I was a new investor. But then, a solutions-oriented person I am, I even gave you a tool that you could use called a stop loss in case this type of thing happens, when the stock just falls off a cliff and people can get burned. So again, there's a lot of things out there. The other problem too with Clubhouse, especially, I will be on Clubhouse later today, but problems with Clubhouse, Instagram at times, you got a lot of brand new financial advisors that popped out of nowhere that haven't managed any money, haven't been in the game long enough, haven't really invested themselves, and did one thing and got lucky, and now they think I'm the world's greatest investor. I know what I'm talking about, blah, 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 blah. That's not how it works. When you sit down and you talk to somebody about your money, which is one of the most important things, not the most important, but one of the most important things that can help you get better health care, help you take better care of your parents and your children. Like, your money is important. You want to make sure you are growing and protecting it in the best ways possible. GameStop, AMC, BlackBerry, those weren't the best possible ways to do it. Too many people rather are looking for lotto tickets, and the people who got in at $4 a share, you made out. I am happy for the people who got in at $4 a share. I had a friend who got in at $4 a share, but I think he sold way before this happened, because this type of stuff it kind of comes out the blue. But here's the problem: by the time you figure this out, by the time you start to see it on the news, by the time I start to see it pop up on my radar and stuff, it's usually already too late. And at that point, you need to go on and just let it go most times. Because just like I said yesterday, we don't know what the top was. We had people saying that GameStop was going to go to $1,000 a share. Y'all remember that? You can go through Reddit, you can go through Facebook. People were saying that, and now it went from close to 500, 468, I think was the high at one point, and it's below 200. And it's not to say that things won't continue to happen, and I don't know where it's going to go. I can tell you that 99% of the time, just like Tilray, just like, what was it, Kodak, just like Carver Federal, just like Hertz, they all do the exact same things. These are companies on the ropes. I was about to say Blockbuster. GameStop was about to go bankrupt. It is not a good company. And what happens is people hype it up, build it up, make a whole bunch of money out of it, and then it starts to fall. Now, GameStop is a bit different because this was a short squeeze, and it was a motivated group of people on Reddit that wanted to bid this stock up, particularly to, one, make money for themselves, but to two, to really stick it to Wall Street, because a lot of these hedge funds do what's called short selling. They borrow shares and they sell them at the high point or whatever point they are today. They let the stock drop, they make money, and then they buy the shares back at a cheaper rate and give those shares back. That's what they tend to do. It's easy money for them. It's very easy money for them when it's predictable, meaning that it's a company that they'll never rise, right? There's no way that GameStop will come back. They're almost bankrupt, right? It was a safe bet until people started to figure out and say, look, if we start to buy it, guess what happens? The hedge funds then have to go back and buy at a higher rate. So instead of 100, they've got to buy at 200, 300, 400, which makes you even richer because you bought it for cheap, and now they have to buy stuff, and it just keeps, it's a self-reoccurring cycle where now the big boys have to buy, that pushes it up, and then you and your friends are buying, and it's just very expensive for them, makes them lose a lot of money, and helps you to make a lot of money. That's what a short squeeze does. Again, pause, timeout. I did an entire video on that, about 15 minutes long. You want to go back and watch that one on Monday in case that didn't make sense. But that's basically what happened. So this one is slightly different, but the result is still the same. Again, Tilray, very similar, $20 a share, 6-7 weeks later, $200 a share, and then a week later, drops down, and it was at $70 before the end of the year, just like that. So it's not a safe thing to do when you're investing like this. There are two ways to win in the investing game, because now people are saying, well, because Wall Street didn't make their money, they wanted to cut it off, because Robinhood and other apps, they weren't the only ones, said, look, we can't let y'all trade this no more. Y'all have made too much money. The big boys are losing too much. The game is over, right? That's how people feel. And I understand that. I totally understand that. And it's not fair. Just because they lost a lot of money, 13 billion and counting, just because they lost money, so what? They don't stop the market when I lose money, right? If you go bankrupt on a stock that you may or may not should have been investing in, they do not stop for you. But now we have to stop making money, us, the people, because the Wall Street billionaires weren't having fun anymore. I get that sentiment, and that's mostly true. But I'll also say this: there are two ways to win at investing, and what we just saw is not one of those ways. The reason I say that is because they invented the game. You do not win a game that you don't create the rules to. That's the reality. I don't like it. I don't like saying it, but that's the truth. They invented the stock market. Do you really think that they're gonna lose at their own game? No, that's not how it works. Because remember, Robinhood is going public this year, or supposed to go public this year. Who do you think owns Robinhood? They do. Who do you think? Remember when we talk about IPOs and it's these hedge funds, these billionaires who get in first, then me and you get the IPO price, and they say, well, the IPO debuted at a 500% gain. I'm throwing the numbers out there, right? Well, yeah, that happens, but that's because they got in way before you even heard of the company, way before it was even available to you. So yeah, you're not gonna win at a game because we didn't invent it; they invented it. So they're not gonna let you win at a game that they created. So there are two ways to get around that. To win in Wall Street, to win as an investor, even as an individual small investor, to create generational wealth, to vacation, do whatever it is you want to do, there are two ways, and only two ways in my view. Number one is to not play their game, meaning that you're buying index funds. You own all the stocks, you're going to be fine. Index funds have a long track record with lower fees where you don't have to get in and try and find the right company. You don't have to try and gamble on something like a GameStop or AMC. You're fine. If you had an index fund and GameStop went up, you made a little money anyway, right? You're going to be fine. So number one, don't play the game, get an index fund and chill, sit down, and let the money just go on its own, or just on its own. One of my favorite index funds is VTI. That's the Vanguard Total Stock Market Index. It's not the only one out there. It's just always the first one that comes to mind. You can go and look into that as well as others and choose which one works for you. Warren Buffett, one of the world's richest people, he suggests that most retail investors, retail is us, should do that. We also know that about 92% of the time, or over time, index funds, just like VTI, beat these Wall Street dudes 92% of the time. So that's one way to win at the game, is by getting an index fund and just relaxing. Yes, it's boring. No, it's not exciting, but it does build wealth over time, and you are going to be okay. You don't have to do all these tricks and flips and all this stuff where you're waking up trying to make sure that you are in the right spot and trying to gamble and walk up out of your job and turn the camera off and try and do all this stuff, trying to trade and trying to do something and hit a home run, trying to get a lotto ticket. You don't have to do that. That's what index funds are for. Index funds are really built for you to win, and there's one way to do it. Number two, and my favorite, you can really combine these two. You can do step one and step two, or option one and option two, is to follow the big money. which is what I have been saying. I've been saying this for a while. It is one of my techniques as an investor. If I know that a lot of money, whether it's JP Morgan money, whether it's Wells Fargo, Warren Buffett, if I know that their money is going into something, then guess who can ride those coattails? Because I know that, I'm making a number up, $5 billion, someone is buying $5 billion of this stock. Maybe I need to be looking into it. For example, Snowflake. Remember I talked about Snowflake? I think it was Salesforce putting $250 million in there. They know about technology. They have been a good company. They believe and want to put $250 million into this. Maybe I need to look into Snowflake, right? That's one of the few times, the one time ever I've ever even bought into an IPO, and I'm holding for long term because I know the big money is behind it, right? Another one, Kroger. Remember I told you guys about Kroger in March, right around March of last year, and I said, look, I'm seeing some things. I think Kroger's going to be a spot to invest. I think it's going to be solid for the pandemic. Then you got Warren Buffett said, oh, I'm buying Kroger, right? I was the one that got out of the airlines in December 2019 and said, look, not really feeling these airlines. It's not a place you want to be. And then Warren Buffett sells out of the airlines months later. And with the pandemic, it was made even better because it just wasn't the place that you wanted to invest back then. So those are the two ways. You either follow the big money or you don't play the game at all and just sit in index funds. One or two or both, those are the ways you are going to win. A dead clock is right twice a day. You're always going to get somebody who bought a trash company, held on to it long enough, and it just so happened to blow up at the right place at the right time, and you just get lucky. I had someone on my email list that said, I bought GameStop at $35 a share 15 years ago. 15 years ago. In December, just last month, it was just $4 a share. So she had been losing money for forever and just forgot. And it wasn't until she got my email, which you should be on the email list. I'll put that link above, because she got my email and opened it and read it, which you should do those things. She opened it and read it and was like, oh my God, like it was at $35 a share. And I think yesterday it was around 195, close to 200 at that point in time. And she was like, well, shoot, I've had it for a while. I might as well just cash out now. Guess what? She did that, but she got lucky. She got it 15 years ago for really cheap. No one had GameStop on their list or on their radar up until it was too late, when it was 80, 90, sometimes $100, $150 a share, which is close to where it is now. So do be careful. But I'm telling you, I have seen this too many times. I've been investing for more than 10 years. Every time I start a video, you know what the resume is. 2017, top 100 financial advisor, best-selling books. I write for Business Insider. Like I do seminars for retirement funds all the time. I'm trying to tell you, as a new investor, if you're an expert and you've been doing all types of trades and doing all that risky stuff, that's cool. That ain't for y'all. This ain't for you. But for people who have never invested before, you're trying to figure out and you're afraid of losing, there are ways to invest while protecting yourself. And GameStop just wasn't one of those. It just wasn't. So you got to be careful. Verify the people that you are following and listening to, and invest based on your style. Because if you're somebody who has to check your investing app every 10 minutes because you're afraid of what's going on, that wasn't a stock for you. When I told you guys I was deciding between PayPal and Square, I put my money and left it alone. I know Square is up today because I got a notification, but I let it roll. And I just keep investing because I know it's a good company. I don't have to come back and check it. I don't have to worry about Apple. I don't have to worry about Walmart. I don't have to worry about Costco. The money's just going to keep rolling and you're going to be all right because it's a quality company. If you got to come back and check it every 10 minutes, if I got to check on the news to see whether or not I can trade that company, that's not a good sign for long-term wealth. Were there people that got lucky? Yes. There were a few GameStop millionaires. There's one dude, and hopefully took his money out, who put in $700,000, pretty big risk, right? And yesterday he had $47 million. I don't know how much money he got now. He probably still got some millions, right? I would hope so. But there are other people on the opposite side of things that put $10,000 in something like AMC, and AMC fell off the map today. So more people lose at this game of trying to get into penny stocks. Yeah, You know why I keep telling y'all not to get into penny stocks. And this is one of the most recent examples. I told y'all all of last year. I've been telling y'all for the last 10 years, really. But I was really, really big on it last year about warning people about stuff like this. So you got to be careful. There are two ways to win in this game. I gave them to you already. Either you just do index funds or you follow the big money. Trying to go against the grain and try and beat people in the things that they invented, that's hard to do. It's noble. I appreciate that because I was like, man, I'm with you, right? Power to the people. We should have more power because we're the average person. We should be controlling more of the market than we are, but we're not. So you got to play the game or the hand that's put in front of you, and those are the two easiest ways to do that. So yeah, man, you feel free to vent if you want to vent in the comments. But what's next? What do we do next? So number one, we know that Robinhood, there is a class action lawsuit against Robinhood for stopping people from trading. In defense of Robinhood, and I'm saying this from my experience on public, I'm not a Robinhood user. I've been telling y'all how I'm not a Robinhood user. This time last year, when the clock struck 2020, they had an outage because of the date. They had a bunch of outages in 2020, and I'm like, that's just not a place where I want to put my money. Y'all know Public is my favorite place. Next to that is Fidelity, and then maybe TD after that. But those are my favorites. I'll see if I can add the link if I don't forget. Put that in the video too. This is more of a rant at this point. But the way this works is there's a brokerage firm. So for example, it's Robinhood. Then there's a clearing firm that actually does the trading. So like Robinhood makes the app, but they send the money to the clearing house or the clearing company, and they're the ones that actually executes the trade and make sure that your money goes and gets this stock, and they make sure the fractions are right. They do all that kind of stuff. So it could have been the clearing company that said, look, we can't do this because of the regulators. We can't do this because it's just too much going on. We don't have the capacity. And Robinhood gets the blame, but it may not actually be on Robinhood. Now, in Robinhood's case, we'll see what happens with them. But that was the case on Public, where Apex Clearing, Public was like, look, y'all do what y'all want to do, but Apex won't let us do it. And they had to work with Apex, and then they had opened things up so you could buy or sell or do what you wanted to do with any stocks you wanted to do it with. So that's, in defense of Robinhood, it may not always be, it may not be on Robinhood. It could be on someone else. For example, if this video messes up, it could be the Microsoft computer, or it could be Zoom, or it could be me, or it could be Facebook because it's posted on Facebook or YouTube or Instagram. So like, it may not be the person that's on camera, the person that you're looking at. So that's just a metaphor for what will happen. I'm not a legal expert, so I'm not going to go into what the lawsuit may or may not do. But I am here to tell you, though, that that's not, you can invest how you want to invest. If you made money, I'm actually proud of you. I'm not rooting against you, but I am saying that don't happen all the time. What I don't want to see is more of a gambling mentality where you went in, you did something, you made a lot of money, and then you go back to the casino and then you start to lose it. And that's what happens. It happens to a lot of winners all the time. In my second book, Starting Point, How to Create Wealth That Lasts, there are plenty of stories I put in there about how a lot of winners lose all the money by going back to gamble again and again and again until they lose it all. So that's not a mentality that you want to get into, because you got lucky once doesn't make you an expert. Long-term wealth makes you an expert. Long-term wealth creates wealth in and of itself. So I just want you guys to be careful of that. So let me check my notes and make sure I didn't miss anything. I don't think I did. But yeah, so right now, at the time of this recording, GameStop is at $150. Earlier today, it was at $468. Some people had seen it as high as 500. I don't know where it's going to go. Generally, these stocks do what's called a dead cat bounce, which if you go back and watch yesterday's video, you'll see it with Tilray, where it shoots all the way up, just like it did at 468. Comes down to 150, it'll probably bounce up. I'm not going to really put a price on it, somewhere between, 150 and 300. And then it'll just slowly start to kind of bounce down and go right back down to normal. With Tilray, this happened. They started at 20, went to 200, came all the way down to about 100, came up to 150, and then just kind of bounced out and just ended at 70, this back in 2018, and it ended up under $20 today. And that was 3 years ago. So just be careful. I've been telling y'all this. for a while now. Be careful. Focus on the long term. Avoid the lotto tickets if you can. I know the fear of missing out, FOMO, is a big thing. Like I've always said, don't let your emotions do the math. Do not let your emotions do the math. This is exactly what happened. You got people who are normally focused, normally doing what they're supposed to be doing on companies they know, they trust, they have evidence and results, and all of a sudden, oh, squirrel, let me go get that. Oh, now it's ANC, now it's BlackBerry. Let me go get these things, and then you lose it all, or you lose a big portion of it. So we'll see what happens. I will stay with this story as long as it goes. We don't know how long it's going to go, and then we'll get back to business and talking about real stocks that make real money without all the hassle. So that's a part of it too. We'll continue with earnings week. Check the previous video. There were some stocks that did release earnings. Square did well today. Several stocks did well today. After the fact, the minute that they cut off Robinhood for whatever reason, the market just took off after that. I think we're up close to 1% across the board. Square at one point was up 7%, which is like that's the stock I think will do the best in my portfolio. You want to see the stuff I'm investing in? Go to Public. That link is above, public.com/buildingbread. You get a share, I get a share, and you get to learn from people and follow them to see what they actually invest in. So one of the better apps and super, super, super simple, which y'all know I love simplicity. All right, that is it for me. Thank you guys for coming out to my rant about checking my notes about everything that happened. Make sure you hit the like button, the subscribe button, the share button. That's the best way to pay me. Hit the share button. And I'll talk to you guys later. If you have any questions, pop them in the comments. I'll hang around.